Thanks, Sarah, and welcome to the latest Payment Strategies webinar. We'll start with the news. So first start with the PSR ongoing review. Following its first 12 months in operation, the Payment Systems Regulator has published its annual plan, which outlines the regulator's key work and objectives for the year ahead. It's worth a look and can be viewed on the PSR website. The plan is the first since the PSR became operational in April last year and lays out the regulator's programme of work for 2016 and 2017, its annual budget and how the PSR intends to work with other regulators over the coming 12 months. So that includes two market reviews. One is looking at indirect access to payments, while the other looks at the underlying payments infrastructure. The PSR will also continue to support the Payment Strategies Forum and respond to the forum's inaugural strategy when it gets published in the autumn. The forum is looking at four key areas: simplifying access to markets, financial crime, end user needs, and so-called horizon scanning. The initial recommendations are due to be concluded by June this year. As part of the work, Bacs, Fast Payments Service and Link are likely to adopt international standards for payments ISO 20022. In addition, the regulator is looking at how a number of EU laws and initiatives are being implemented within the UK market. They include the interchange fee regulation, the payment accounts regulations, and working alongside the Financial Conduct Authority on the implementation of the second Payment Service Directive. And we'll be talking about PSD2 shortly. So in reality, what does that mean? For starters, it's proposed that Britain's biggest banks sell Vocalink, the company they own jointly and which runs most of the company's payments infrastructure. It's a deal that could be worth between 400 million to 1 billion, depending on which numbers you read. So that's a 14-strong consortium of banking providers that includes HSBC, RBS, Lloyds and Barclays, which own Vocalink. The company runs payment services banks, including Bacs, Fast Payments, the Link Cash Points, as well as the mobile app Zap, all of which serve the banking sector as a whole. But the Payment Systems Regulator says the system is unfair, and it's proposed that the banks sell off Vocalink. It believes the current setup reduces innovation and competition in the industry. So to put that into perspective, some suitably eye-watering numbers. Vocalink processes more than 90% of salary payments in the UK. It's more than 80% of household bill payments and almost all state benefits. That totals 11 billion transactions a year with a value of £6 trillion. Now, e-payments are in the news and in the money, as it were. According to Visa Europe, bars and restaurants have driven a big increase in higher value contactless payments following last summer's rise in the floor limits. That's from £20 to £30. In general, contactless transactions over £20 saw an average monthly growth rate of nearly 20%. That was between October 2015 and March this year, which was over twice the average monthly growth rate up until that point, which had been about 8% under the £20 floor limit. Visa also says contactless use between £20 and £30 now accounts for more than 10% of all face-to-face card transactions within that higher spending band. In the meantime, PayPal signed up the first British-based company to its mobile payment service. It's called PayPal Here, and it allows smaller companies to use mobile devices such as smartphones or tablets as a point-of-sale terminal by building in the payments functionality into the mobile applications. It's providing what it says is an affordable piece of transaction software, and it's aimed specifically at SMEs, sole traders, cabbies, and independent traders and corner stores. So there's no monthly fee as such. Merchants pay a £59.95 fee for the car reader, and then there's an ongoing fee structure of between 2.75% and just under 2% per transaction. Elsewhere, Australia has become the latest territory to go square. Payments company Square has now expanded into its fourth global markets by debuting its credit card readers and point-of-sale devices right across Australia. So it already operates in the US, Canada and Japan. So it's steady expansion there. Just before we get underway with the presentations, just want to mention the UN and the World Bank have committed themselves to providing digital IDs to every single person on the planet by 2030. Clearly that's an ambitious 15-year undertaking, but it is possible given the proliferation of mobile devices during the past 15 years. So digital IDs are essentially defined as smart cards that use public key cryptography, devices that contain biometric information, and device that allows relatively easy proof of identity. They're already obviously being used in many countries, predominantly in the G20, but widespread use across the internet will require some form of standardization and seamless smartphone integration, which are all yet to come, but have been promised by the UN and the World Bank. As ever, it's the why that's generally the most interesting point. One of the main reasons the UN and the World Bank say they're backing the initiative is because they believe if every person has a digital ID by 2030, world politics could be far more democratic. So the main points, move on to today's presentations. First of all, we've got Jonathan Williams, our Director of Payment Strategy. He'll be covering off emerging trends in payments, fraud and financial crime. John's followed by Matthew Silverstone of the Midas Alliance. Matthew's going to be talking about upcoming requirements for authentication and identity checking. And with the forthcoming changes to internet security fast approaching, Elaine Shipton, payments specialist, will discuss how the industry is responding to the urgent need to make changes. I'm going to round off today's session with the usual Q&As. Now, the questions can be submitted online via the dialog box at any time during today's session. Anyway, thank you, and over to you, John.
Thank you, Dominic. So in this first session, as part of this webinar, we're going to be looking into some of the updates on some of the information on payment fraud trends. And we're going to be looking at statistics from FFA UK, the Financial Fraud Action UK organisation. We're going to be looking at some of the new methods of attack and some of the responses from the industry to it in terms of industry initiatives and new bodies. And finally, we're going to look at some of the forecasts and try and extrapolate from the statistics we can see and from the knowledge we have in the market as to where things might go. So FFA published their statistics a little over a month ago now, and these are the statistics for the whole year 2015. What's slightly concerning is that the total fraud losses reported by FFA are up 26% to £755 million of financial fraud losses. Typically, these are categorized into three main routes of loss. One is card fraud, which of course we know is one of the major means of compromise from fraudsters. But interestingly, remote banking and cheque fraud are also reported on by FFA UK, and quite important and significant areas where fraudsters are getting financial benefit from consumers and from businesses as well. So looking at card fraud to start with, card fraud itself is up 18%, and that's to £567 million, an eye-watering sum. But what's more concerning is card not present transaction fraud is up 22%, so the losses are now up to £398 million. The reason that's most concerning is that card not present transactions typically tend to be more automated or automatable, and therefore fraudsters could attack in bulk merchants or card system, and certainly issuers will be hit with potentially increased amounts of fraud if fraudsters decide to move most of their operations to card not present. Only £74 million was lost via lost and stolen cards. So that's where cards intercepted in the mail. But that was of £843 million worth of attempted card fraud. And what's worth noting is that card spending increased by 7% to £622 billion. So again, card fraud is a very small proportion of a very large amount of spend, but something which we're all concerned about, and certainly our issuers are. What's more concerning is the increase in remote banking fraud. So this has gone up 72% to now £169 million in the year 2015. And that £169 million is what was actually lost to fraud. There was over half a billion pounds worth of attempted remote banking fraud. And we'll look at that in a little bit more detail and which mechanisms and methods we use to attempt that type of attack. And finally, cheque fraud. Cheque fraud's down. The loss is actually down 6% to only £18.9 million. But what's interesting is that the total transaction value decreased by 8.9%. So actually, as a proportion of the total value of checks processed, then the fraud rate has arguably gone up ever so slightly. So let's look in more detail at the history of card fraud. And here you see a diagram of how the various methods of card fraud compromise over the last 12 years or so. And as you can see, we've taken, it hasn't as if we as an industry and merchants, issuers and acquirers haven't been taking action to try and prevent this. And a number of methods, a number of mechanisms we've taken have actually been very successful. So if you notice, there's certainly been growth since 2011 on the total volume, total amount of card fraud losses. And most of these compromises are typically down to the card not present type of transaction. As you can see, these are effectively for remote purchases. That's the blue column. One of the things we've been very successful with, as you can see from the introduction of chip and pin back in 2006, one of the areas we've really managed to cut down on is the amount of counterfeit card fraud. And that's the purple band, the fourth one from the top. So certainly by 2009, we are seeing significant decreases in the amount of counterfeit card fraud. Now, we haven't reduced this to zero, at least in part that's because these cards are then being used abroad where chips are not required and just a mag stripe is good enough. And therefore, counterfeit cards can easily be used in some territories outside the UK on UK-issued cards. So it's very important to look at the percentage of this which is cardholder not present. So this is the blue column. Over the last 10 or 11 years, you can see it's remained pretty much stable. We haven't been able to crack down on card not present fraud as much as we would have liked. However, in the last few years, it has been increasing, and that's a significant concern for merchants and acquirers. In a previous webinar, we discussed what card not present fraud was, and here are two definitions, one from the UK Cards Association and one from Visa Europe, which are slightly at odds with each other. They generally agree in most cases. However, the definition I particularly like is the one where the cardholder and the merchant aren't actually physically present in the same place when the transaction is taking place. And so CMPs typically when we're talking about remote purchases. So when you're buying goods or services from a merchant online and you may be keying your card details in and using other security mechanisms to secure those transactions. And therefore card not present transactions are a very significant concern because they can be replicated time and time again. And Matthew Silverstone is going to be talking about some of the requirements on Payment Services Directive version 2 around replication of attacks. So let's have a quick look at a dashboard of card fraud. So as you can see, the total in the UK has gone up quite significantly. However, it's as a proportion of the total spent, it is 8.3 basis points, so not particularly significant. That 8.3 basis points is 0.083 of 1%. Card fraud has decreased significantly over the last 7 or 8 years, but with the increase last year, we are only a little bit below the peak in total card fraud, which was £610 million, and that was in 2008. Typically, card fraud is influenced by a number of different key factors. Obviously, social engineering, persuading individuals to give you their card details, but potentially be able to capture those using automated mechanisms such as malware, or maybe using phishing or vishing technical attacks. So either compromising the telephone system or compromising emails using a phishing type approach. One of the areas that fraudsters managed to get these details. And what we're seeing now is that the last few countries which rely on the magnetic strip on the back of a credit card, so-called mag stripe fraud, we're actually seeing that its last few years of use as it gets removed in countries worldwide. On the card not present fraud, card not present is up 20%, as we said earlier. Actually, quite significant because it's 70% of all card fraud. And that's an increase on 2014 slightly of about 1%, where it was 69% of all card fraud. Of the card not present, 66% of that is used for e-commerce. A good proportion of that is also used for mail order or telephone ordering, where the card is not present at the point of purchase. And in some cases, it's for repeat purchases for card on file. Typically, with card not present, it's about ensuring that cardholders pass that information across, pass their details, and pass their security information. So, for example, the CVV2 number printed on the back of the card, or maybe their 3D secure password. And therefore, malware, phishing, and social engineering are the main routes that fraudsters use to get this information. Typically, when we hear about card not present, it's certainly in the media associated with hacks of merchants, but the evidence suggests that these aren't generally merchant hacks, which then result in this type of card fraud. On the right-hand side, counterfeit card fraud is down 5%, and again, that's about removing the very simple mag stripe cards and replacing those with card not present. So the move in the US to so-called EMV standards, or chip and signature, means that the number of places you can use a mag stripe card without a chip is getting less and less. And one of the things we're certainly waiting for to really clamp down on that is the point of sale liability change. So last year, October 2015, the point of sale liability shifted for some merchants, all of them, and it's estimated, however, that only 25% of those merchants have EMV or chip-compatible terminals. And therefore, that incentive to move across to those EMV terminals, we're seeing it as being a great impetus to take on the new technology and to improve the security at the point which the cardholder has the card in their retailer. Finally, contactless fraud is significantly contactless transactions have significantly increased over the last year or so. However, contactless card fraud is a very small proportion. So of around almost £7.75 billion worth of spending, that's only £2.8 million worth of fraud. And you'd have thought with contactless transactions not requiring a PIN or a signature or any other security mechanism, purely actually having the physical card in your presence, you'd have thought that might be a vector of attack for fraudsters. However, what it appears from the experience from 2015 is that it's only 3.6 basis points, so that's half the card fraud average. And obviously we've seen a significant increase in the volume of transactions. Hopefully this trend will continue next year, so we'll see still a small volume of fraud on those contactless transactions. One thing which is slightly concerning is that the volume of card fraud cases is also increasing. So in the last year, 2014 to 2015, we saw a 15% increase in the number of cases. Of that, the nearly 1.5 million fraud cases involving cards, 1.19 million of them related to card not present fraud. As we discussed, that's very concerning. What we've seen is that the attack levels have been increasing hugely, and therefore prevention mechanisms in the industry have been ramped up to actually cope with that. Even though we have a significant value of fraud in these particular cases, actually the prevented value of loss to fraud is 1.76 billion. So to put that into context, £6 in every £10 worth of attempted fraud was actually prevented. So that's good news from the industry. On the right-hand side, this shows you how the different types of case involved, and the vast majority of these were typically for remote purchases. So coming back to that rather concerning statistic around remote banking losses, as you said, up 72% 2015 on 2014. And here's a diagram which shows the history of remote banking fraud and the different types of social engineering attack. As you can see, over the last 10 years or so, comparatively small variation. In the last 2 years or so, we've seen significant increases year on year. And this may be for many reasons. It may be that simply the social engineering attacks are becoming more sophisticated, or it could be that fraudsters are finding it more difficult to perpetrate other types of frauds and are seeing that remote banking is the lowest hanging fruit. It's an easy route for them to get money from consumers. And one of the challenges is that because consumers are typically prevented from loss associated with fraud on many of their card products and many of their card transactions, they may not be as well protected on some of the remote banking transactions, particularly where they've disclosed their security details to fraudsters or been encouraged to make transfers outside their accounts to fraudsters' collection accounts or mule accounts. So there may be an expectation from the consumer's side that they're protected, whereas in fact they're not protected by any particular scheme. And therefore we've seen many cases in the media of horror stories of consumers defrauded out of thousands of pounds, in some cases very sizable sums, because this type of fraud is more easy to perpetrate and very difficult to prevent. And what we have certainly seen is, as the US has tightened up its security, this may be one of the reasons why fraudsters are now attacking the remote banking route and looking to see increases in fraud losses on that channel. So one of the concerns is with the US implementation of EMV, we may need to think about exactly how we ensure that the remote banking channel remains protected and to try and cut down these losses in the next few years. And again, identity authentication may be one of the key ways of doing that. So this is a statement from Katie Warbeck, who's the Director of Financial Fraud Action UK, and she highlights the essential nature of bank security information and the need for consumers to go and protect that information to protect the whole financial security system. So what is the industry doing? Well, there are a number of initiatives here, many of which have been in action for a number of years, but I'd just like to highlight two of those. One is the Joint Fraud Task Force, which is a government initiative trying to crack down on fraud all the way across the UK. And the second is the Payment Strategy Forum, which is a organisation formed by the Payment Systems Regulator. And as part of that action, one of its working groups is looking into financial crime, data and security, with fraud being one of its main targets. So it'll be interesting to see how these new initiatives join the other initiatives in the market, work together to go and beat down the total of fraud losses in the UK and potentially across Europe. So finally, just highlighting a couple of the new and growing methods of attack. As I said, remote banking is increasing, and some of the methods we're seeing in use are with imposter investigators. So it could be people claiming to be from the police, from the bank, or in some cases from a regulator saying we're investigating financial crime. Other methods of remote banking fraud may be where compensation's paid out and an overcompensation payment is made to a consumer and as a mistake, or at least the fraudster claims it's a mistake, and the overpayment is then asked for back by the fraudster. Of course, the initial compensation payment never gets made back to the consumer, and so they end up out of pocket. Finally, of course, remote banking, compromise of security accounts and security information is one of those key channels. So some things that might well fix that particular problem are stronger authentication and better means of ensuring you know who your customer is. Over the last few years, we've seen invoice fraud hitting businesses, but these are now hitting consumers. And they typically tend to be for higher value invoices. So things like private school fees or maybe construction work are typically targeted. It tends to be a more high value fraud rather than a high volume. As you mentioned earlier, with card present fraud, we're seeing the last gasp of counterfeit cards. So foreign cards being used in the UK without chips, but also UK cards being used abroad without just using the mag stripe. And lastly, organisations are still being targeted for fraud. Recently we've seen CEO or director fraud, by which an individual claiming to be a CEO or director sends an email or notification through a business application to make a payment to a third party. Of course, it really isn't the CEO or director, it's a fraudster impersonating them. And in some cases, these sums have been eye-wateringly large. And finally, we're seeing a continued increase in invoice procurement or supplier fraud, where a fraudster claims to be a business and changes the bank details on an invoice, to be their own bank, and many businesses would pay that invoice to the incorrect bank account without checking. Experian can help in this area with a number of products specifically around confirmation of ownership of accounts. So finally, to sum up, we're certainly seeing that fraudsters are getting very creative, and they're looking at all the different payments channels. As we start to tighten controls on some of them, they're looking at you proliferating to other means of committing fraud and other different payment mechanisms. In many cases, social engineering, convincing individuals to accept data or make payments, is the primary route to compromise of those payments mechanisms. So to fight this, actually improving confidence in the payments, knowing who you're paying, knowing that the payment information is correct, knowing that the accounts of the counterparties are correct, is the absolute first line of defense in ensuring you have confidence in your payments and confidence in the robustness of your security mechanisms. I'd like to hand across to Matthew, who's going to be talking about PSD2 and security. Thank you.
Thanks very much. Very scary figures from Jonathan. Let me just go on to my page. There we go. So Jonathan raised a number of issues there, one of which is the fact that the growth of fraud is going up exponentially, and what is the industry is going to do about it. Now, Europe in its wisdom has basically said we don't think that the industry is going to be able to do anything about it unless we change the rules. So PSD2 has come along and basically thrown away the rule book and said, okay, everything that you thought you knew about payments has suddenly changed. And we have a new player in town. Now, for a lot of you today, I think you're going to be quite shocked at what the new solution basically requires. The good news is number 4 and number 5 on this point is the Midas Alliance and technology solutions. So there will be a happy ending. So basically, when I explain to people actually what the ramifications of PSD2 is, these are not tears of joy, by the way, these are tears of sorrow. Most people actually are completely alarmed. And for those of you who are listening, I understand that quite a lot of you from the utilities, telcos, retail, insurance industries, you're in for a bit of a roller coaster journey in the next 10 minutes. Once I sort of explain, okay, what PSD2 means, what we then find is the reaction is seriously, or as John McEnroe once said, you cannot be serious. It's a bit of a shock to the system for an awful lot of individuals. And why? Well, what does PSD2 basically say that is so shocking? Now, no more of this refers to, actually not the dyed hair, it refers to that bit of plastic that she's holding in her hand, because as a consumer, I'm sure all of you have basically bought products online, and PSD2, let me just remind you, is actually primarily an online regulation. So what we're saying here is, in future, when this piece of legislation comes in, which is January 2018, no consumer will be allowed to use their plastic card to buy goods and services online. Now, just think about that for a minute. As a consumer, let alone as an organization. What does that mean? That means that you won't be able to use your piece of plastic to buy any goods and services online. So what else does it mean? Well, in essence, it means the end of Amazon as it currently stands, and PayPal, which is light touch. It means device-based authentication also you won't be able to use, Apple ID. PSD2 means that all plastic cards, such as not necessarily MasterCard and Visa, but the issuing banks utilizing that service, will have to come up with a completely new system. The FIDO Alliance is an organization that uses device-based authentication. That won't be able to be used. And retailers, or telcos, utilities who retain the customer's credit card details for regular payments, such as monthly payments, will not be able to use that technology as it currently stands. So this is PSD2, this is its implications. So everyone from a consumer's perspective who are listening, who like basically going to Amazon, clicking on a button, it retains your credit card information, it remembers your username and password. Under PSD2, you will not be able to do that. So it's back to school for everyone. Basically, Europe has come up with a new solution that is basically asking us to readdress everything we thought we knew and basically come up with a new solution. So you have to remember that PSD2 has been in negotiation for 5 years up until now. It got ratified last September, and organisations have been aware of it for some time. So you would have thought that an awful lot of the banks or the financial services organisations have come up with solutions for PSD2 and are readily prepared for it. Well, sadly, I can tell you this is not the case. Very few people, and I'd like if I could see you, I'd ask the audience to put their hand up to say who's ready for PSD2, and I'd be fairly confident that no more than one person, if one person would actually put their hand up and say, yes, we're ready for PSD2. Why are they not? Well, the EBA basically sent out a discussion document over the Christmas period that had to be answered by the 8th of February, asking for organisations to report back on what they thought of PSD2 and how it was going to affect them. Now, that is going to be published later in the year. So what that means is there's a number of organisations who are just waiting for the EBA to publish their report on how the PSD2 is going to be regulated. Now, the problem with that is if everyone waits for the EBA to publish their report by the end of the year, that only gives organisations a maximum of 1.25 years to integrate a new solution, pilot, educate the consumer, roll it out, pay for it, budget it within 1 year and 3 months. Therefore, it's very unlikely to happen. So the question also is, why PSD2? Because we've met a number of financial organisations who are still in denial, who basically think PSD2 is not going to happen, and that they can ignore it because they don't think actually it's a well thought out bit of legislation. But then you've got to look at it from the European perspective. As Jonathan basically shown, fraud is on the increase. There's no solution out there that's going to say fraud is going to decline. So Europe is saying, okay, what we need to do is we need to start letting organisations know that they're not happy about it. We don't like paying 2% of our GDP in Europe to basically American organisations. Fraud is on the increase, ID theft is rising, and the money is generally going to basically bad causes. So I don't know if you were aware of the last budget. In the last budget, the Chancellor taxed the food industry because they didn't feel that it was being well self-regulated. And in essence, Europe is doing exactly the same for the payments industry. It's saying we don't think you're self-regulating very well, so we're now going to basically ask you to do everything completely differently. PSD2, they believe, will stop most fraud from happening. And even if, let's say, for argument's sake, you're a bank and you say, well, actually, we'd rather take the financial hit of not introducing PSD2, you have a bit of problem because there are a couple of other regulations around the corner, particularly the data protection regulation, that says if you don't comply with the secure pay aspect of PSD2, you could be fined 4%, sorry, that was a bit of a shock to me as well, 4% of your global turnover is the maximum fine. So therefore, if you have a data breach and you lose some of your customers' data, such as the obvious target attack, you can get fined 4% of your global turnover. So, the Midas Alliance. So I set up the Midas Alliance with a number of other organisations, one of which is Experian. Jonathan Williams and I sat down and realised actually there was a need to come up with an organisation that could help define the standard upon which PSD2 is based. So the Midas Alliance was formed, and we've got to the stage now where this is just the definition of the Midas Alliance. You can see it on the website. Now, I'm not going to go into too much detail about what the Midas Alliance is, except the fact that if we hadn't have got together and sorted out the Midas Alliance, we fear that the regulators would have taken too long to come up with a decision, by which time the directive of PSD2 would have been in force. So we basically come up with a PAS code that we've defined a scope for that's been agreed by the BSI, which is the Code of Practice for Identity Verification for Mobile and Desktop Financial Transactions. This is its executive summary. I'm not going to read through all of this. You can look at it later, but it basically just says what the proposition of the PAS is. And this is probably the most important section. I'll read out parts of it because PSD2, these are the requirements of PSD2, and this is what you need to go to on the MIOS Alliance website, because it'll give you a better understanding of actually why all of those previous solutions don't work anymore. So the first one is must be mutually independent, i.e. the breach of one does not compromise the other. Now this is why device-based authentication doesn't work. So the key to PSD2 is the fact that it has to be multi-channel. So that means that the reason you can't use your static credit card is simply because if stolen, it can be resold on the dark web. So what they want to have is to have a one-time card number generation system used over 2 independent channels, so that it's a one-time card number, and if intercepted, can't be used again. Point number 3 is designed in such a way as to protect the confidentiality of the authentication data. So there's a piece within this that basically the data has to be anonymous. Now this will affect all your retailers, because what it means is a consumer, when paying by a PSD2 solution, doesn't actually have to give you any information about them at all. They can pretend to be Mickey Mouse or Donald Duck, and you will not have any idea unless the consumer decides to opt in as to who they are. And the 4th is not capable of being surreptitiously stolen by the internet. I'm always amused by the fact that they use a word that most people can't spell, so I'm not quite sure who put in the word surreptitiously. Something only the user knows, and this is where it comes to the biometrics. So point number 3 is something the user is, i.e. biometric characteristics such as fingerprint or face recognition. The only problem with fingerprint is it's mostly device-based authentication. So unless fingerprint is a server-side, it's not going to be of much use. And then the definition, the PAS scope, actually includes all these other issues, privacy-enhancing technologies, anti-money laundering. Now, the only problem with anti-money laundering is that it's kind of a contradiction, because anti-money laundering rules require that you know everything about the person doing the transaction. PSD2 rules imply that the individual can remain anonymous. So there's a bit of a whose regulation is it anyway. Zero transactions, that's for instance when you're renting a car on holiday and they take a deposit even though you actually haven't made a payment. And then they slipped in this at the last minute, 14th of October, just after it was ratified, and this is the one that got most people confused, a dynamic link. So when you do a transaction online, there must be a dynamic link to the amount of the transaction and the account of the payee. Now, we did get a couple of emails after this went out that basically they didn't put the dude in, but they did put in the WTF, because most people are going, okay, PSD2 is complicated, but now it's even more complicated. Now, the good news is there are solutions to PSD2 from a technology perspective that answer all of the issues that are being required. So there's applause. Now, according to SecuredPay, the solution must have 2 independent channels. Now, this is taken from the Bacs website. This is just from our video. So what this is showing is the fact that you can have 2 independent channels. So a one-time number is generated via a banking app on the customer's phone. So the bank knows who the customer is and generates a one-time number to the individual's phone. The individual then transfers this number over to the PC checkout page. The number is then transferred via the EMV rails back to the issuing bank. When the issuing bank matches up this one-time number, it will then confirm payment. Now, for all you potential fraudsters out there who think you can grab that 16-digit number and go on your merry way spending it on Amazon under the name Donald Duck, I believe that is, remember, it's a one-time number. So this one-time number has already been used. And one of the beauties of PSD2 requirements is if you were to take this number and then sell it on the dark web, it actually is redundant because it's a one-time number. So one-time card number generation on the server, this is what I was just discussing. So if you're also making a payment on your mobile phone, the two channels you'd use are 3G and Wi-Fi. And if you were to use that, you would click on that red button that says copy the one-time number, and then you copy and paste that to the checkout page on your mobile phone. Biometrics, as I said, is part of PSD2. I'm not going to go into too much detail about strong authentication using various different biometrics, but we find that the most secure method is to combine a face recognition and a voice recognition because it has a very strong liveness detection where the individual reads out 5 random numbers, so you won't be able to have a replay attack. And that WTF moment, this is the digital signing part of it, and this is a potential solution for that. In this case, the customer is asked if they've spent £120 using the card number ending 7266, and the signature of that is them replying, yes, it was me. The organisation obviously knows the device that they're sending it to, and the reply is, yes, I paid for that particular money. NFC, now NFC might surprise you, but it is classified as a digital payment and therefore comes under PSD2. Which is good news for some people and bad news for others. What it means is, though, that you can generate your one-time number using your banking app and then just use it at an MPOS terminal, hand it over, and it will basically pay for your goods and services in store. Oh, just one addendum, PSD2 is for goods and services bought over €50. That's approximately £30. So in the coffee shop, you don't need tight PSD2 security at all. Now, device authentication is a bit of a no-brainer. Experience FraudNet is one such good example, that you will have to have a combination under PSD2 of biometrics, of one-time card numbers. It doesn't state you have to have device authentication, but it's pretty much something that you will have to have. Behavioral biometrics, as again with device authentication, isn't actually defined in PSD2, but it would make sense to know that this person normally shops between 9 and 12 on a Tuesday in this particular area. So you tie that in with geolocation, and behavioral biometrics becomes a sort of a sensible part of PSD2. Now, I did have one discussion with one bank who said actually Secure Pay doesn't talk about the registration process, which indeed it doesn't, but it does imply that everyone needs to look at their registration process again, because if you have a biometric associated with an account, you have to put that biometric back onto the account of the individual. So you'll need to start seriously thinking about how to have a secure form of registration in order to comply with Secure Pay, which means in order to comply with data protection and PSD2. So how do you get a more secure aspect of individual registration? Now, this is me doing a quick demo of our live streaming. This is an alternative idea that we have whereby the individual is basically broadcasting live from their mobile phone, and they put in front of the stream their driving license or passport, and you can then see in real time that the customer is in fact holding up their ID document, and then they can combine that with face recognition and voice recognition, and then that can be either accepted or declined. If someone's trying to basically stick their mobile phone up in front of it as a picture, then you can obviously see that the customer is trying to defraud the system. So this is one of the key questions. When do we tell the consumer? So I think, as I stated at the beginning of the talk, that as consumers, it's all a bit of a shock. So if we don't educate the consumer, if the consumer doesn't know that in sort of years of time they won't be able to use their bit of plastic in order to make an online payment, will they stop shopping? If you are a telco and your consumer isn't allowed to leave their static number within your payment system and they have to contact you every month, does that then give them an opportunity to move to another supplier every couple of months because actually they're woken up to the fact that, oh, I'm paying this much money this particular month. Same with utilities. So if you want to become a part of an organization that's helping to drive the new standard and define the new standard, I'd like to invite you to join the Midas Alliance. It's free for individuals. If you want to join as a corporate, then there's a fee to pay. I think the next big meeting is next month once the PAS has been signed off. And then we're setting up the working groups to actually help define parts of the standard. So please join us. If you need to contact me about anything, these are my contact details, both at Bacs and at the Midas Alliance. Thank you. And now I hand over to Elaine.
Thank you. Okay, that was all very scary and interesting. And this is not scary and not so interesting. However, it is important. How do Thank you. Just sorting out the technology here. Okay, so unless you've been on holiday or in a coma or hiding your head in the sand like the people on Matthew's slides for the last 9 months, you will know that security standards for the internet and for Bacs in particular are being upgraded. So essentially, this is because it's not just card fraud that's increasing, but hackers are basically getting better. Their technology is getting better, they've got better algorithms, they've got more powerful machines, and they've been working very hard at cracking the codes that we use to protect ourselves. They haven't actually broken the current standards yet, but the evidence suggests that they will be able to in the near future, and so the whole of the internet community needs to start using something safer well before the security that we are using actually becomes compromised. Because if we don't, then they're going to be able to intercept payments and divert the funds to their own accounts. So that's gone too. So what is changing to stop this happening is that there are two things basically. We're changing the standard of the security for the communication between the service user and Bacs. That's moving from TLS 1.0 to TLS 1.2, and also the SSL certificates for that are changing to SHA-2 from SHA-1, and this change is taking place in June this year, on June the 13th, and that's the thing that we all need to be making changes for immediately. And the second change is that the standard for signing the submissions that go to Bacs and for logging into Bacs to retrieve reports are also changing from SHA-1 to SHA-2. Now, you don't really need to understand what any of that means. You just need to know that you're ready to cope. So, what do you need to do? Basically, if you're a direct submitter using your own Bacs software, you need to talk to your solution supplier. If that's Experian and you're using Experian Payments Gateway, your account manager should already have spoken to you, and either you will already have upgraded or you will know when you're upgrading your software. If you're not using our solution, then talk to your own software solution supplier, find out whether the version of the software you're using supports the new standards, and if not, you need to arrange to get your software upgraded to the current version, which does support the standard. If you're a direct submitter using a cloud solution, again, talk to your supplier, make sure that they're ready for the changes and that there'll be no disruption to your use. And also make sure you know what operating system and browser you need to be able to support the new standards, because it's not just what's happening at their end. You will need to use the right kit at your end to be able to make use of it. And finally, if you're an indirect submitter, again, talk to the bureau that you're submitting through, make sure that they're ready. And if you collect your own reports from the Bacs Payment Services website, make sure that your browser and operating system support the new standards. So that's typically a minimum of Windows 7 and IE 10 or whatever the equivalent is that you're using to be able to actually use this new signing standard to just log in. So that's the first change for June this year. The second change, which is you need to do for next year, is basically be ready for that change. So talk to your solution supplier if you're using your own solution, find out whether the version that you have to go up to for June is the same version and if not, plan for another upgrade. And the other thing is that when the banks start distributing the new smart cards, which can do the SHA-2 signing and are signed with SHA-2 standards, you will no doubt have a mixture of SHA-1 and SHA-2 cards, and the banks will be issuing a new version of the e-signer signing software that's used, which will be dynamic, which basically means it can use both kinds of card and it will use SHA-2 signing if it can. If you need any further details about what's happening and why, you can look at the Bacs websites. So there's a page about the SHA-2 information, what you need to do, and there's a FAQ to explain it all if you haven't caught up. Okay, testing. Obviously, we've all tested our software, but if you want to test the new changes, which was the TLS and SSL security changes, which will be happening in June on the software that you're now using, Bacs is providing 3 test slots for you to be able to do that. That's this Saturday, the 7th of May and the 6th of June. On each day between 10 a.m. and 4 p.m. you'll be able to send in test submissions, and they will be using the new communication standard, and that allows you to check that your new software is actually doing what it needs to. So finally, how is it going? Well, apparently it's doing well. It looks like the solution suppliers are all getting everybody upgraded in time, and the June deadline should pass smoothly. So Bacs is quite confident. We know that for our own customers, the majority are already ready for the changes in June, and the remaining ones are mostly booked in, and so will be ready by June. We understand that other solution suppliers are all on a pattern to be getting their customers ready in time. However, we can't be complacent because there is still a lot of work to do. We know that our consultants are fully occupied between now and June getting everybody through the final stages, and I'm sure that everybody else's are as well. So basically there's still a long way to go, but we're confident of getting there. Thank you.
Thank you, Elaine. Hello everybody. Well, thank you for listening through that. We'd now like to take some questions. You should be able to see on your screen there is an area in which you can type your questions, so please do that, and we'll put them to our panel members. Okay, yes, looks like we've got a question. Just bear with me a second.
Okay, so first up is what happens if we're not ready on 13th of June? It's a deadline question there. Elaine.
Okay, so what we would suggest if you find you get to the 13th of June and your payments don't go through because you're not ready, we can provide you with a copy of Experian Payments Gateway, basically do a minimal configuration to set up a user and your service user numbers and get you making your payments pretty much straight away, and then you'll need to catch up with whatever you want to do long term in less of a panic.
That's great, thanks. Right, got a question for Matthew regarding PSD2. Speaker advised that no consumers will be able to use their plastic cards to buy goods and services online. Does this apply to new payments or recurring payments, whereby the organisation would retain the customer card information?
Yeah, as I said, it's really scary. So what it means, the key to the whole thing is static numbers versus one-time numbers. So if you're doing any payment at home, online, or a retailer retains your static number, PSD2 is basically saying we don't like it. So what they're saying is if you're a retailer, Amazon, PayPal, or any of these organizations, you cannot use your current static number for goods and services over the amount of 50 euros. So what the Europe basically wants you to do is not retain any card data, because if you retain card data, you're open to attack. So if you don't have any data, then there's no reason for anyone to attack you. But obviously it presents a problem for you because you've got to actually then start looking at how else you're going to do your business, how you're going to charge people on a monthly, weekly, yearly basis, insurance companies on a yearly basis. It's problematic.
Yeah, it sounds like it is. Interesting. There's another couple of questions here about PSD2. What type of organisations will struggle in preparing for PSD2? I know you mentioned insurers there. But
well, it's easy to say, are there any that won't? I can't think of a single company that is not going to struggle with PSD2. Yeah, we have meetings with banks who've never heard of PSD2. I mean, it's shocking, but you can have an online meeting with an organisation who approaches us for, let's say, biometrics, and we go, well, what do you think of PSD2? And they go, actually, well, what is PSD2? So from a timescale point of view, I can't see how any of the banks are going to hit their targets, because most of the banks work to a September budget. That means they've got to pilot it, roll it out, test it, and it has to be launched with a customer education piece in sort of 16 months' time. It's just going to be virtually impossible for the banks to do that. So then it's a question of what are the fines going to be? Is it worth taking the hit on the fine rather than not be ready and just go begging to the FCA or not? So it's difficult. What are the likes of Amazon going to do? You know, the whole raising debt is their one touch. What are Apple going to do?
Yeah, I see what you're saying. I mean, there's another question here actually. Is there a download URL for the Midas PASDoc?
Yeah, the Midas Alliance. Just go to the Midas. Not yet for that PASDoc, no, because it's not publicly available. We're just basically signing it off with, we hope, UK Cards and Payments UK. They've approved it with the BSI. So any day now we should publicly announce that. It's a sort of 45-page document. But if you want to be send information about it, I'm sure that I can get the information from Experian and forward it on to you.
That's fantastic. I mean, generally, are there any signs of panic in preparing for PSD2?
Sorry for laughing. There's so much panic. There's so much panic because no one's got a clue. I mean, you know, I'm in the enviable position of, okay, we came up with a solution. But if you're a bank and you're relying on the regulator to say, oh, don't worry, folks, ain't going to happen, I think you're going to be in for a shock, because you've got 28 member states with currently 28 member states with 28 different interpretations of it. If you're a bank and you have customers and branches in the rest of Europe, you're going to have to go with what they say. And we know that a lot of the Europeans are really happy with PSD2 because it'll stop online fraud. So I would basically say no one's ready, not even close to being ready.
Great. Thanks, Matthew. Interestingly, talking of fraud, if a merchant is PCDS compliant and all card data is stored by their PSP, how will they be impacted? That's probably one for you, John.
So if they are storing tokenized information, so the standard which is being referred to is the PCI DSS, the Payments Card Industry Data Security Standards, which govern the security of merchants who want to make transactions. One response to that is to use tokenization, and that's being offered by the schemes in addition to a number of other providers. In this case, the card numbers are not stored as they are, however, they are effectively still static data. And so one of the questions is whether they need to be replaced with something which is more dynamic, either the card numbers themselves or making a dynamic link back to the individual. That's one of the challenges that the identity authentication standards are looking to try and establish.
Thanks, John. Got a quite interesting SHA-2 question here. We've been advised that SHA-2 changes are not required until the end of the year, but TLS are required by June. Is that correct?
Yes, it is correct, but it depends on what you mean by SHA-2. So I think this has been confusing in the way it's been talked about. The change in June is the change to the communications, and there are two things happening there. The TLS standard is going from 1.0 to 1.1 or 1.2, and the SSL certificates are changing to SHA-2 SSL certificates. So Bacs have been calling that change SHA-2, but that is not the SHA-2 signing change. So the signing change means that, well, there are two things. The signatures that you use when you log on will be calculated using SHA-2, and the credentials, that's the smart cards or HSM certificates, will be themselves signed using SHA-2. Now the software that Bacs need to use to be able to accept SHA-2 signatures actually went in this week with, as far as I'm aware, certainly not for us, without any kind of problems, and in fact our software is now signing using SHA-2 signatures, but not using SHA-2 smart cards and certificates because those haven't been issued yet. Those will be issued by the banks starting in February next year, and then there will be actually a migration period over the next 3 years, by which time nobody will be allowed to issue SHA-1 certificates anymore. So although the SHA-2 change to signing doesn't start until February next year from the point of view of the banks issuing SHA-2 certificates, you can sign using SHA-2 now because Bacs are ready for it, and the change in June uses SHA-2 SSL certificates. So there are 3 different things that we mean by SHA-2, and I hope that clears up what you wanted.
Thank you very much, Elaine. I think we're out of time now. If there's been any other questions we haven't been able to get to, we will answer those to you separately. We are going to send out a recording of this to everyone who has attended. You might need to leave it a couple of days while we get everything ready and the recordings hosted for you. So thank you all very much, and goodbye.